Order filled.
Alright, hello everyone, it's Fearin. Welcome back to a new YouTube video. In this video, we'll be breaking down how I got just over 103 points, how I made just over $13,000, and every little aspect of this trade. Essentially, what I've done today was perfectly catch the weekly smart money reversal, what I'm anticipating to be the low of the week. So we're overall going to be breaking down how I've been able to predict this, as this was exactly what I posted beforehand in my pre-market analysis in my group. So we're going to be breaking down what I'm expecting next, and we'll be doing that after I show the trade recording. So we'll catch you guys right after that. Alright, so hope you guys enjoyed that trade recording. Now we're going to get into my pre-market analysis, what I posted entirely beforehand. So in my pre-market analysis, I posted essentially that we have S&P at the highs, clear zone liquidity at the lows. And this was about 50 minutes before market opens. Essentially what I was stating was that if the previous day low, which was the immediate John liquidity lower, was not rated going into New York Open, then I will look to short down to that previous day low. On the opposite, I stated that I will look to long if / once the previous day low is rated. That was assuming that we would then form SMT with that previous day low. And to add on top of that, this was exactly what I posted in my review and that I posted within my private group last night. Essentially, my thought process for overall higher time frame structure would be something like this. We come down, soup the previous day low, form SMT, and then expand higher. I mean, again, I posted this entirely beforehand. This was posted last night, as you can see, with NQ being all the way up in premium. And then this morning, we had a slow grind lower down to the previous day low. Previous day low was then rated, as you can see, and then we expanded higher. Now we're going to break down the specifics overall what led up to the trade, and we'll do that right now. So all the way back to market open. So 9:30, right before 9:30 opens, this is ultimately what we were presented with. NQ, ES, YM, all three of them all still above the previous day low, none of which had rented out. So immediately going to market open, I was looking for potential short, a potential short down to the previous day low. However, we immediately opened up back here, and in terms of risk reward, we formed a little bit of SMT at the highs, but in terms of risk reward, we were already right next to the John liquidity. By the time the 1 minute CISD occurred, we just ran out my John liquidity. Due to no short being presented, the only way I could have shorted would have been if NQ returned all the way up into a premium, but we did not. We instead immediately dropped and ran out the previous day low. You can then see that ES and YM both failed to. Only NQ would have ran out the previous day low, giving us SMT with the previous day low. Boom. First stage of SMT. The second stage of SMT. Go back onto a higher time frame. We can see right here that down here at 5:30, we had a significant news event. As you can see right here, 5:39, we had a significant candle. That I'm going to show you is what you can find on financialjuice.com. So we're going to scroll back down to 5:30. I think it's going to show up as 4:30 on this because I'm in CST. So go down to it. Yeah, exactly that, 4:30. So China set to limit access to NVIDIA H200 chips. Don't really know what that means. Obviously, it means what it says. Point is, due to that, that made the market aggressively drop. And as we can see, that can act, or not as we can see, but as I've taught in the past, and as we're taught generally in the market, is that that can act as a data high and low, the same thing as high impact news. And as we can see, NQ, ES, actually does ES? ES does not actually. Only NQ runs out that low, which we can treat as a data low. So NQ runs out the data low all the way down here while we run out the previous day low, giving us a higher time frame SMT, a middle time frame SMT in terms of the data low calculation, and boom, on an even lower time frame, the 1 minute chart, we have an additional lower time frame SMT right here between YM, putting in a failure swing, NQ and YM, or NQ and ES both putting in a lower low. So boom, now we have 3 stages of SMT all the way at the lows, and immediately we're presented with a long. We're then presented with a cracking correlation with the previous 1 minute low all the way down here in discount of the range. Right here, 1 minute time frame, a little cracking correlation with the previous 1 minute low as YM again puts in a failure swing. NQ and ES put in a lower low, giving us a little lower time frame cracking correlation. That then caused me to drop down to a 15-second time frame. And when I do this, again, it's very, very high risk without the proper data collected. So I would highly recommend staying away from it if you had entered off the 1 minute inversion right here, or perhaps a 1 minute CISD. It's not the worst decision in the world, because had you entered there, your risk reward is still about actually it's a lot lower than I thought. It's under 1 and 2, so that's actually pretty poor. Had you entered off the 1 minute inversion, which you can treat as a little bit extra confirmation, you're presented with a 1 and 3. So that's not the worst decision in the world if you lack access to the 15-second and so on, or if you just don't know how to enter off the 15-second, then 1 minute inversion, 1 minute CISD, both of which obviously lower risk reward, but they're still valid to enter off of. Anyways, I'd entered off of the 15-second CISD My specific fill was at 8425, stop loss at the low. TP was at the true day open, which I haven't really talked about on that on any YouTube videos, but it's essentially my drawn liquidity for the day, and we see that that gave me a 1 to 4, just over 1 to 4 risk reward. I was in fact considering, I posted in my intraday that I was considering, where was it, at 10:07, I said I was tempted to instead trim at the true day open and hold last contract for true week open or potential high of the day. In fact, I'd even said that my ultimate drawn liquidity was a new high of the day. But, and if had I done that, actually, that would have been a just under 1 to 6 risk reward. But I really wasn't, because of the fact that we're overall fading higher time frame structure, even though we're expecting, you know, a smart money reversal, due to the fact that we're completely fading it, we still have to be a little bit cautious. So due to that, I just targeted what in my eyes was a low-hanging fruit, and that ultimately was my drawn liquidity. I went break even at the most recent swing high, and pretty much just had left it from there on out. And that generally recaps today. There's nothing too special we really want to go over. Aside from that, we can take note of the fact that Trump does speak at 6:10 p.m. For those who are not aware, he speaks at 6 p.m. That overall explains why today, well, I guess the rest of the day, didn't really do anything too special. Once we ran out the high of the day, we pretty much just slowed down and did nothing else too interesting, which makes sense in preparation for Trump speaking, and that's about it. The very last, this is technically the end of the review, but the very last thing we want to do is explain why we're expecting the weekly Power 3 to be bullish and so on. So the reason as to why we're expecting it to be bullish is because naturally the higher time frame is bullish. So we want to expect our lower time frame Power 3s to continue our higher time frame Power 3s. So actually I'm going to zoom out on this chart because I still have my annotations here. I'm going to zoom out here and we can see that we have, and as I've discussed in previous videos, 3 weeks ago, we completed a 4-hour market maker sell model. Beginning of the year, overall higher time frame, yearly Power 3, beginning of 2025, accumulation, manipulation, distribution. So because our yearly Power 3 is distributing higher, we want to see our lower time frame Power 3s replicate that. For our market maker sell model is completed, so higher time frame trend, which is bullish, can continue. And if that lower time frame trend is continuing the higher time frame trend, then simply going into each lower time frame Power 3, we want to see continuation of it. Since the beginning of this current weekly Power 3, beginning of the week, Sunday 6 p.m., we open up, accumulate, manipulate, end of the manipulation, we have SMT, confirming continuation higher. We'll go on to something like the daily time frame. There's no real, higher time frame PD ray. We go on the daily, go on the weekly. There's no higher time frame imbalance, no higher time frame PD ray that price really has a reason to manipulate down into. Since completing that 4-hour market maker sell model, we just placed higher, daily CRSD, daily imbalance gets filled. We'll leave behind a breakaway gap as the market does. And, we're immediately expecting higher prices from here on out. So due to that, we overall got a very small manipulation within a weekly Power 3. And that's truthfully all we need, because once we formed SMT the previous day low, we immediately reverse, we immediately expand higher, 1 hour CISD, 1 hour buy program. So ultimately, we'd want to see continuation of this. Obviously, we'll see how overnight develops, what Trump says, and of course, FOMC. That's another thing. FOMC is tomorrow, so that entire idea could be thrown out the window. For all we know, we could put in a new low of the week and then expand, or perhaps put in a new high of the week and then sell off. There's so many scenarios, but overall, just because the higher time frame is bullish, it's much higher probability to expect continuation of that compared to anything else. But overall, that is a review of today, breaking down the trade I've taken. So if there's any questions, comments, concerns, please list those in the comments below or join the server, ask in there. But I'll catch you guys all in the next video.